Hello, everybody. It is June 16th, 2022, and the market took another tumble today, which we have been following along with because we were pretty prepared for it. So now we have to figure out what to do. So let's think about where we've been, where we're going, how we're going to do it, and what these big secular trends are that I'm not sure everybody quite buys into. I want to sell it to you a little bit today, because if you're paying attention to some of the big money, it is very clear where the world is going over the next 10 years. So we started with a historically overvalued stock market. This article is from January 2022, basically tells you these are all the reasons why the stock market was going to collapse. But there's more. It wasn't just valuations. It is a bifurcation of the market. What do I mean by that? I mean that there are a lot of companies in the S&P 500 and small companies too who could also get money for cheap between SPACs and loans and penny stock scams, whatever it could be. But capital is cheap, the same way that it was cheap in 2004, 5, 6, 7, leading up to the financial crisis. The difference between now and then is that we've discovered QE. We've discovered that we can beat deflation by filling in the sinkholes with cash. And in this particular instance, we probably filled in the sinkhole a little bit extra, but we know there's another big sinkhole coming. So you've heard me say that all we did is really pull forward the bailouts of the future. And the biggest bailout of the future has to do with the baby boomer retirement bust that's coming to an elderly person near you in the next decade or so. There are a lot of baby boomers who don't have the money to retire. And yet, due to COVID, many of them left the workforce. 1/4 of them have actually come back, most of them part-time. So they're aware that they don't really have the cash to live to be 90 or 100 years old. And that deflationary force of a giant generation aging and aging without a lot of money is why I always talk about slow growth forever. We need a way to finance the future. And financing the future requires, frankly, that we build back better. I use that term because I know it'll get your attention. What did I say before that slogan came out that we needed to do? We needed to rebuild the world. And we need to rebuild it in a sustainable way so that energy can't be weaponized anymore and that inflation can't make 60, 70, 80% of the population miserable, hence the misery index. And we can use technology to do it. And where we'll go today is into the two biggest trends in the world and how they play together: decarbonization and the fourth industrial revolution, because both are going to make you a lot of money. And for people who don't embrace those ideas, you're going to languish. You're going to languish forever, because not only is this bifurcation real, it is so real. And I've given you this term ahead of the public that what we are going to see is the great divergence. I originally called it the great bifurcation, but it's a weird word. The great divergence, I think people understand. You can visualize how it's a road that breaks into two parts, to the left, to the right, up and down, however you want to do. And Divergence is the name of a movie, so I know people know the word. What's going to happen in the next decade is that companies with low or no growth, or that are outright shrinking, but have balance sheets that need to be financed on a continual basis, are going to start running into big problems refinancing their debt in the next few years. Remember, I've showed you the dollar chart. All right. I've been showing you this dollar chart, I don't know, 4 or 5 years now. And what I believe is that way back here, 2012, when I wrote an article for MarketWatch and said the dollar was going to go on a long-term bull market, and everybody told me I was crazy, 10 years later, here we are, where the dollar was, where the dollar is. And this long-term bull market in the dollar is probably going to end up in this area about 10 years from now, give or take, maybe 7, maybe 12, but in that general range. That doesn't mean we won't have a pullback. In fact, on Monday, I told you that we would have a pullback in the dollar. And what has happened to the dollar in the last 5 days? You can see that it turned over. And why did it turn over? I think it probably has something to do with this. The Fed is going to lose money next year if it keeps raising rates. How do you think the Fed feels about losing money? Not too good. Now, there is a benefit to them losing money. It means that they're paying the banks. So if the banks need money they'll leave interest rates up a little bit until, of course, inflation starts to go away and deflation comes back, which I anticipate happening in roughly the next year and a half, because the Fed reloading its bazooka is almost done. They have raised interest rates, they're buying back debt, and they really don't need to do it for very long. If the Fed buys back roughly $500 billion of debt by the end of the year, I think that'll satisfy everybody. Inflation will start to come down because housing prices start to come down. Unemployment goes up just a little bit. Supply chains are already doing pretty well, except in a couple of key areas. Inventories are pretty full, with the exception of some key things. I was playing poker last night at a bar here in Milwaukee when the owner was in the game, and it was hot. It was really hot. Probably was pushing 85, 90 degrees in this place, and he's got a really big place. He said, look, I've been trying to get new air conditioners for 2 years. So I texted a buddy of mine that I play poker with. I said, hey, on the commercial air conditioner side, how tough is it to get big air conditioners right now? And he goes, depending on the size, you're looking at anywhere from 24 to 28 weeks if you're lucky. So there are still things that are backed up. And it made me think about, well, gee whiz, which companies are going to do really well given that they have these huge backlogs? And I'm guessing, I haven't even looked yet, that they're already overpriced, because I think everybody already knows this. And they're making a ton of money on service, which has huge margins, way bigger than selling new equipment. And this guy can't even get somebody to fix his air conditioners, his 10-ton air conditioners on the roof of his building, because they can't get the parts. So there are key areas where supply chains are still goofed up. Semiconductors have just started the 2 or 3 year journey to being cleared up. The car industry says that they have enough semiconductors at the moment, but of course they've already kind of suppressed their builds. So it's probably not until late next year when Intel has more capacity online and Texas Instruments has more capacity online. So all these things play together, and it has to do with slow growth forever and this massive energy transition that technology is going to help us get through. And in the meantime, Saudi Arabia, Russia, and China essentially are the ones causing inflation. Folks want to say it was the Fed because the Fed is everybody's favorite punching bag. Nobody thanks them when they keep us out of depression, which they've done twice in 15 years now. But I believe the Fed is doing a pretty damn good job. And I don't think they tell you the truth about what they're doing and why they're doing it. I've told you this before. Everything the Fed does is about the dollar. Everything they do is about the dollar. And eventually, because the petrodollar is going to go away, and a lot of the world has developed, but the reality is we have massive geographic and economic benefits, advantages that nobody else has, which is what this article was about, strength beyond the balance sheet. And we should have the strongest currency in the world. We've held it back to help grow the world economy, and it will pull back here sometime this year, and that'll spark a bull market, but then it'll start to drift back up. And the reason it'll start to drift back up is because you're going to be shocked at how fast we can move towards a balanced budget. And the only thing that we're going to have to avoid is alienating countries like China and Russia to the point where they want to have more than a proxy war. And because we're so strong, and always will be, the benefits of our geography and economy so massive compared to any other large economy that I'm not really sure what could even change it. The geography doesn't change. So you take a look at North America, and you already hear calls for a North American bloc in energy, but it's going to become for everything else. And as we go through this technologically driven move towards sustainability, and oil becomes less important, it won't become unimportant, not in our lifetimes. It'll just become less important. The dollar is going to get stronger and stronger and stronger because Saudi Arabia can't influence it. Right now they can. It's something that you really need to take the time to wrap your mind around, because not only is it important, what I'm telling you is roughly correct. The dollar's not going to collapse. Can it trade down for a little while? For sure. And it will, probably soon. My guess is by autumn. The same time that the Fed says, hey, maybe we're not going to raise rates anymore, and maybe we're not going to buy back more debt. We'll just stay level. And if we start inching towards a recession, they will reverse course. And any recession we get will be short, and it will be shallow. We are not leveraged the way that we were in 2008. And the upside of this energy transition is massive. It is the biggest economic transition in a century. and we're going to come screaming out of this. And with the millennials in their peak earning years and more boomers working part-time because they have to, you're going to see an American economic boom that might rival the 1950s, which was only that big because of World War II. We had destroyed half the world. We had to rebuild it. And now we're going to rebuild it again to be sustainable. So again, so that energy can't be weaponized, so that food stays in abundance. We have a lot of food. We're just horrible at moving it around. Digitization, you'll get that word again in a minute, of the global economy is going to make things incredibly more efficient. I told you a little story a couple of weeks ago about how I visited my grandmother in the hospital and I met her rehab doctor. Any of you remember that? What was her specialty? She was the rehab doctor. Artificial intelligence. Why would a rehab doctor be a specialist in artificial intelligence? I think it's a pretty easy answer: to make the system work. It's not just the sexy rehab toys, but it's making sure that everybody gets the care they need at the time they need it to make it more efficient. Which, if any of you had to go through rehab, you know that that's important because a lot of things fall through the cracks, the crap too. My friend Al, the 72-year-old who I've kind of talked about over the last year, who had to fight cancer and developed cognitive issues along the way, which had already started years and years ago, pretty much fell off the cliff because he fell through the cracks. The system has not served him well. It's a combination of the people, the system in general, and the fact that we didn't have the technology 10 and 20 years ago put in place already to help keep an eye on him. Department of Aging doesn't have a real good computer system. Certainly isn't using AI. We've talked about AI investments in healthcare before. Took a shot at one and it sucked. It isn't ready yet, but it's coming. And this digitization of the global economy, from energy to healthcare and everything in between, is going to generate gobs and gobs and gobs of money. If any one of you here have $50,000 right now, I think, and you're throwing in a couple bucks every year, I think in 20 years you'll be a millionaire. No sweat. No sweat. If you're a retiree and you worry about your long-term retirement, you think, well, I can't take risk. That's good. But you need to reimagine what risk is. Is risk investing in the things that we know that all the capital is being deployed to? Or is risk being invested in something that did well in the past, hasn't done all that well lately, basically been choppy for a decade, but you get your dividend because in the past it did something? A lot of those backwards looking stocks have not invested in the future, or they can't. There's secular trends working against what I call grandpa stocks. It is safer. It is always safer in any business, in real estate, in an industry of any sort, that where the capital is going from the big investors, from the giant corporations, the institutions, and the government, where they're pushing money is where you need to invest. This is where it's going. It is going to the fourth industrial revolution. This article is on Forbes from 2018. This is the Brookings Institute from 2020. Talks about the fourth industrial revolution in Africa. Salesforce, a Dow Jones company, fourth industrial revolution. McKinsey, one of the top research companies in the world. The fourth industrial revolution will be people powered. What does that mean? Well, go back to that doctor. She's in Portugal right now, I believe, giving a presentation on AI uses in rehabilitative healthcare. AI is a fourth industrial revolution technology. You need a good definition. This is the one from Salesforce, and I've put this up before. The fourth industrial revolution is a fusion of advances in artificial intelligence, robotics, IoT, genetic engineering, quantum computing, and more. Remember back in February of 2020, those of you who were with me back then, or have looked through the videos, the CEO of Samsung, whose presentation I was at, said that AI, 5G, and IoT, right, lots of acronyms, was the perfect marriage. What does that mean? So 5G is communications technology, correct? It means that we have low latency, extremely fast, almost instantaneous communication. And that links all the different machines that are on the Internet of Things. So when McKinsey says that the Industrial Revolution will be people-powered, it means that we are going to have the tools to do a lot more work, be a lot more productive, and productivity is a driver of economic success, that work from anywhere and hybrid work schedules are going to be very possible, short of managers being control freaks, because we'll have the AI and the communications to do it. All these things are accelerating. They're not slowing down because breathy, we might have a recession for a quarter or two. The stock market went down. Nobody gave a damn when it went up in a bad way. All that's really happening is that the zombie hunting has begun. And as everything goes down, and it does because that's how it works, the zombies won't come back. Eventually, the undead will die. And if you own things that aren't involved with the fourth industrial revolution, and notice I'm one of the only guys that have mentioned 4IR on Seeking Alpha, and the transition in the energy system, you're missing out. Because it's not that I don't invest in energy. We have some really nifty energy investments, but they're not oil stocks. They're not oil pipelines. They're not really oil related at all. I'm invested in things that are going to replace oil over a very long period of time. But if oil is slightly becoming less important and everything else is becoming more important, which one is less risky and which one is more risky? But I used to make money on Exxon, and it just had a big rally. Yeah, if you own Exxon or really any of the large oil majors, with the possible exception of Total, which has moved way further ahead on clean energy than anybody, you ought to be selling them. You ought to be selling your oil pipelines. Oh, my 7% dividend. Not for long. Later this decade, demand for oil will stop going up. Probably 2027-ish. I keep coming back to that year for a lot of reasons. I showed a interview on the chat room today from the CEO of Ford. Don't want to listen to me, listen to him. Most popular car company in America is telling you the EVs are coming and they're coming fast. He said at one point, we don't have years to get this done. We have months and quarters. That's how fast the transition is moving. As soon as the manufacturing lines are all set up, which they're in the process of, and they have enough semiconductors and parts, which they will in 2 or 3 years, you're going to see everything shift towards EVs, and it's going to happen fast. And then oil will turn over, and the pipelines will be less full, contracts will expire, and companies that had big cash flow won't anymore, just like they didn't 2 years ago. What you saw in COVID with oil was a preview of things to come, although the next time it'll be slow motion, and people will keep trying to believe that it's not happening. But the world's changing, folks. It's changing faster than you think. Next 5 years are going to be a big deal. Go on Bloomberg, do a search for decarbonization. Look at all the hits you get. They just keep coming. And look at who's involved. It's everybody. BP, I have that article up. I've talked about green hydrogen. We're invested in a company that's going to do it, that right now has some amazing liquefied natural gas technology during this period where we really need natural gas. Digitization and decarbonization in the new reality. This is KPMG, folks. I'm not busting out any bloggers here. These are the heavyweights. I've talked about how policy was going to keep pushing this, right? In our 4-step process, it's look for secular trends, then look at what the central bank is doing, which is usually a shorter term thing, and then what the government is doing, which is generally a longer term thing. Then industry and company fundamentals, and then technical indicators. Government policy keeps moving towards stricter and stricter rules and more incentives to decarbonize. Why? Because they know the facts on climate change. You can fight it all you want. You can listen to some guy who's just trying to get YouTube viewers to make him rich, which is what happened. Or you can listen to people that are funded by Koch Industries and Exxon to poo-poo climate change, right? Because their bread is buttered on the oily side. You can listen to them, but if you believe them, you're in la-la land. The only thing to quibble about is time frame. And once you start quibbling about time frame, you should realize that, oh my gosh, it's happening. What happens to my investments if it happens to the faster side of the timeline? They get destroyed either way. They just get destroyed faster. Engine Company 1 is a company that went into Exxon and saved them from themselves by instituting policies that would get them closer to decarbonizing. Chevron, what's their next biggest business? Carbon capture. Exxon's trying to get into it. What do we have an investment in? The company is going to be the biggest in carbon capture in California that Exxon or Chevron will probably buy. Probably Chevron because they're in their backyard, but you never know. Maybe Exxon wants to get a foothold in California. And it's all going to be driven by technology, digitalization, make sure the systems work, monitoring, sensors, using IoT, using AI, edge computing, quantum computers when we finally have them, but the computers that are even faster than yesterday's as we get towards quantum computing, which suffers from similar problems as fusion reactions. So we might not ever get there. We just might get better on the path. The 3Ds of energy: decarbonization, digitization, decentralization. Development Bank of Latin America, right? This is what's going on. And the more we can do this, the less of the forest we have to tear down. BP, I mentioned this company sort of on Monday. General Electric, Next Era, Ditch Carbon, huge bet on hydrogen, right? Back in 2020 after CES, I suggested that heavy industry would move towards hydrogen and transportation. Heavy transportation and heavy industry are going to find a way to use hydrogen. Siemens, they're in this. It's all coming. So I wrote the Q3 2022 plug and play stocks. We'll cover them on Monday. I will not be doing a presentation next Thursday, but on Monday we will cover these stocks. Between now and then, read up why I changed the ones I changed. And we will focus on why the companies that I have on here are in good place. Now, there's going to be some that not all of you want, right? The ones that are attached to Bitcoin and a little bit of Ethereum, but mainly Bitcoin, you may not want. You might be like, well, I'm still not into that. But again, my thought on Bitcoin is this, and there's only 4 on the whole list. I mean, it's 60 stocks. There's 4 that are tied into Bitcoin and a fund. Is that if the super wealthy are investing in Bitcoin, it's going to become a thing. And right now, the super wealthy are buying Bitcoin. How do I know this? Because 2 years ago, family offices owned like none of it, 0. And now 1/4 of family offices, the richest people in the world, are buying Bitcoin. And not because it's going to replace the dollar or anything else. It's because it's a store of value. It is scarce. It is secure. It is a place to hold money, basically anonymously until you move it again. Very best explanation of Bitcoin that I've ever heard, and I've stuck with this for a few years now, is Bitcoin is digital gold. So when I took a look at the stocks that I wanted to be in, I went over to bar chart. I just did some simple screening for which companies have done the best over different time frames. For the last 5 years, I took a look at the companies that did the best, and I did it with dividends and without. And what you find is that there's not a lot of dividend paying stocks that really outperformed. There just isn't. So when you take a look at total return, there's a handful of dividend stocks that did well, Apple being the best, but it's got a tiny dividend. There's some other ones in here that I decided that I wanted. So I did add a couple. So we now have about 25, 30, I think it might be 30 dividend stocks with really good yields that are tied to the 4th Industrial Revolution or to change in energy or other secular trends. They all have capital going towards them instead of capital going away from them. They have investment instead of divestment. And that's what you want. You want the money in your direction. Long investment, short divestment. What's the biggest divestment movement in the world? Fossil fuels. Institutions all over the world are getting rid of fossil fuel investments. Who's going to be left to buy it? When the giant funds are selling oil stocks, as they are right now, you started to see the move in the last week. Who's left to buy those stocks? How is the little retail investor who control 10 to 20% of the trades and less as a percentage of the actual dollars going to push the price up of a stock that when the pension fund of California sells $1 billion worth and gets out of whichever oil companies they've sold, they already, I think, have sold them all, but other institutions are following suit on time frame commitments. Who's going to buy those stocks and push those prices up? It's nobody. The big money is making the transition I just told you about. 4th Industrial Revolution, energy transition. You do not want to buy the stuff they are selling. You will never make money doing that. When the big guys are selling, you sell. When the big guys are buying and investing, you buy and invest. Stay on the same page as the big money. They control the world. They control the investment markets. I just whipped this chart together. This is why my other chart got goofed up. I put Apple. Then I compared it to some of our other dividend stocks. I ended up throwing one of these out. But you can see how the returns shape up over the last 5 years. Would you rather have owned the ones up here or the ones down here? Now, I think several of these are going to rebound. And a few of them are so stable, like Cisco, that even though they don't have a lot of upside, they have like almost no downside. And they have a couple of catalysts that might give them some extra growth things as well. Mainly communications, right? All communication. Nutrien we sold right at the top Not ready to buy it back yet, so it's not on the list. And some other ones are on the list, some other ones aren't. Threw off a couple of stocks that you're not going to believe I threw off. I just don't think they have any upside. And they're very capital intensive in a world where capital is getting a little bit more expensive, at least for a while. And if I'm right, and I'm not the only guy saying this, if I'm right, if the dollar really does move into a higher regime period, at least through the millennials' retirement, that changes the game, folks. That changes the game. And what's going to be interesting is people are going to ask, when the dollar starts to rise again after this inevitable pullback, but interest rates are also going down, I'm going to get the same question I've gotten before. How can interest rates go down but the dollar go up? It has to do with relative strength. If everybody in the world is scared, and the United States is the biggest economy, at least per capita, China's basically tied with us, but per person we make way more. It's because when the rest of the world is scared, the money comes back to America. You get panic investing. Get people saying, I want to get my money out of China or wherever. I want to take it to the United States. And one of the places that's going to increasingly happen is Europe. Over a decade ago, I said that eventually the euro will trade in parity to the dollar and then at a discount. I think it might be in that series of articles I wrote in 2012. I'd have to find it. And here we are. The euro is basically at par with the dollar. Folks, the dollar is the strongest currency in the world because the United States has the best economy in the world, supported by something that can't change, which is the best geography in the world. And now all this money that we've accumulated over generations since World War II is being used for the next phase, which is the slow move towards an economy that probably for 30 years is going to run a balanced budget starting sometime in the next decade because we pay our bills off. It makes the dollar stronger. And everybody here is going to live really well because the dollar is stronger. We can buy whatever we need, even those of us who are in the bottom 20% and not the top 20%. And the middle class in America is going to come back in a roaring fashion. It doesn't happen. It doesn't have much to do with politics. The machine is the machine. The economic machine is the economic machine. Unless we do something really stupid, like voting for another self-interested demagogue or dozens of them. Unless we move to the extremes, we're going to be fine. If we move hard right or hard left, we're screwed. If we stay near the middle, it'll all work out. So keep that in mind when you vote and get over any ideology that you have and try to look at things like a stone cold killer economist, right? Because there's all kinds of those. The United States is going to get even richer. The question is do you take part? If you bet against the big money, you're not going to take part. Bet with the big money. All right, I'll let you go. And on Monday, we'll go through our stocks so you have the weekend to look at them. I'll kick out some small articles over the next 2 weeks. I am playing in 5 World Series of Poker tournaments, so we will not have a Thursday meeting next week. We will do Monday, and the following Monday, I'm not sure. I think we're going to miss a Thursday and then a Monday. So we have Monday, and then in 2 weeks, Thursday. Pretty sure that's the way it's going to go. I'll put a note out. All right. Have a great rest of the week. And you really should be nibbling in on some of our favorites that are near bottom fishing prices. Don't let perfection be the enemy of good.